Good morning to all traders and welcome to another Markets in Waves, September 2nd today, Thursday. One day left for the week to close and one day left for NFP. It's going to certainly be an interesting one. Let's see how markets are going to react, followed of course Jackson Hole as well. Today we're going to have a quick look again back with the TXY, pound dollar, dollar yen, the prices of oil and also gold. Now, if you recall, we were looking at this move to the downside the other day. We were looking at this being a 1, 2, and we were looking at a move to the downside for 3. Now, what's actually has happened since is that we have to, because our 1 was up here, we had to label these because we've got 5 waves to the downside now, okay? 3, 4, and 5. Which means to me, it looks like this is going to be a correction, perhaps even, that will happen today until there is more clarity tomorrow. And after NFP, we could continue lower or we could continue higher. So if we continue lower, obviously that is going to, validate the impulse to the downside in wave 3. If we continue higher, we might get a deeper correction, okay? That might bring us, for example, might bring us to the 93, 93.20 or even higher up. But, this would probably also be a cause for an adjustment on this particular leg to the downside, and we might have some sort of ABC over here, and a continuation to the upside, or more of a WX and Y, I would say, actually. Now, in the very short term, also do note that it could be a case, guys, that our 5th wave ended here, okay? And that is a correction in wave 2, which means this is 1, 2, 3, 4, and 5. For 1 internally, 2, 3, 4, and 5. So there is also the chance in the short term that our wave 2 is already in. Now, MACD and RSI do not show really strong signals, but in case we get more upside, then a sort of bearish hidden divergence is very likely to be formed. On pound, we're trying to figure out this move to the upside the other day, if you remember. Now, with this correction coming in, it looks like to me that this is a very nice leading diagonal. Okay, so we've got 1, 2, 3, 4, and 5 over here. Yeah, and also we've had a leg to the downside. And that leg looks like it can be either an ABC, that can be like an ABC and 1, 2, 3, 4, 5 for a flat. It can be a case where it finished already here and will continue higher, or it can be like, some sort of correction over here that, might turn out becoming a WX and Y combination, or pretty much anything but a triangle on a standalone triangle. The thing is that, guys, we need to remember that leading diagonals usually retrace quite a bit. They go to the 78.6 or even to wave 2 low, which is the 136.80. So we have to see how this develops. To me, so far, that looks a clear ABC, okay? And that looks like an ABC as well. And if we pull the Fibonacci, we'll probably have done the 90% as well. You see, exactly here, to assume that this can be a flat pattern, excuse me. So that means 1 and 2 is done. We're going to get 3, 4, and 5. Perhaps we can get down here. Perhaps we can move lower down for a regular flat extension, okay? Now, for example, the best highly probable assumption, I would say, is that this could turn out being a flat with an extended wave C, since leading diagonals, they are followed by deep corrections. Now, on the RSI MACD, we are seeing signals that indicate that, we could be getting another leg down, and that also really supports the particular scenario, main scenario that we're talking about. Obviously, if that's not the case, then we would be looking also perhaps at, in the medium term, that to become an ABC, and a 1, 2, 3, 4, 5, which is not really changing the structure that we see here, but we still have to wait for prices to get to around 140 to decide whether this is the case or not. Dollar yen, I think last time we looked at it, it was maybe Tuesday. We're looking at this triangle. We're looking at prices to move actually higher up. Yeah, and it has happened. And now it looks like we're going to get another ABC down in wave E, okay, around 109.30. And from there, since this is a WX and Y combination, we can start seeing prices increasing, okay? But obviously we need to break outside this trend line. And on the downside, since we are going to go and do wave E, we need to also get our 70 here, okay, that 70 level, because that's 109.50. Because what happens usually, guys, truncations can be seen at around 70%, right? This is when it's valid. So we're talking about a symmetrical triangle here. So measuring this leg to the upside, wave D, and having 70% as our like early sort of premature reversal, it's ideal, because sometimes prices tend to come exactly at the same level cluster wise. So this is the case here. By the way, if you haven't noticed, look, my 70 is exactly where the trend line is. And also some other cases where, of course, the trend line is further away, we can perhaps consider premature entries here, or to receive a confirmation that there is some sort of support, and that supports the particular reversal following like the completion of the triangle and things like this. So now on the RSI and MACD, as you will see, I mean, we're not going to get enough, to be honest, because we're in triangular contracting triangle. So the truth is that volumes are, well, supposed to be actually lower, but here you can see some big volumes coming in over here. But yeah, volumes and also volatility is supposed to start decelerating, and then at some point we're going to see the breakout. USDJPY, USD oil, US oil, 5. It looks like a 5, right? 3, 4, and 5 internally. A, B, and C finished, will move higher, or W, X, and Y finished, will move higher. Yeah. So this is what I'm looking, and this higher in both cases, as we're talking about, can literally be A, B, C, or 1, 2, 3, 4, 5. So if we stop here, very likely we're going to go for a triple zigzag. If we don't, very likely that our correction ended down at 61.70, and the trend is going to continue higher up. Now we do see also some very good signals here, divergence on the RSI and the MACD. Okay, volumes are falling, and we see some increase in the volumes on the downside here, so which indicates that perhaps we might see another leg down before we get more clarity about the continuation of this impulse to the upside. Okay, now as you can see, and I would suspect that the moment the correction is in, we're going to see increased volumes, and increased in what sort of perspective? In the perspective that this is my 1 and this will be my 2. So my third wave has to be very high volumes, because that's the impulse. If it's not going to be high volumes, the chances of that becoming an ABC instead, yeah, they are going to increase. Just keep that in mind. And then gold. Well, also looking here in the short term, we're looking at two scenarios, right? One is that this is my 1, my 2, my 3, my 4, and we're expecting a fifth wave up. This is an ended diagonal, by the way. And I'm looking at this as the main because it's the only structure that makes very good sense. The only thing I don't like is that the duration of the ended diagonal, well, it's like probably like 4 or 5 times lasting longer than the correction in wave 2, and like maybe 3 times longer than the correction in wave 4, or even longer. So, but it makes sense structurally speaking. Okay, I mean in terms of the price patterns rather than the time dimension. Right. The other scenario is like we'll have a much more extended wave 4, which means this is an A, B, C, D, and E. Okay, something like this. This is my 4, and my 5 is like 1 and 2. I'm gonna get like 3, 4, and 5, and continue higher up for 1. But this is a bit of a second probability. Let's say less probability, because there is no sync between waves 2 and 4. We prefer to see sync between 2 and 4 rather than, you know, like 4 and 5, for example, because they're both corrective, the 2 and the 4, if that makes sense, right? So I do see with 1, 2, and 3 done, maybe 4 is finished, guys, and we're going to see A, B, and a C, and anywhere above the previous high, we're going to see a correction, okay? On the RSI, the signal is coming through, okay? On the MACD, it's a bit of a mixed situation. We don't get a double signal, we get only a single one, and it's already pretty much expired, if that makes sense. But if we look at the momentum on the MACD, you know, we are actually turning negative already. So we might see another spike to the upside, take out the previous high, and then correct down to, well, if we assume we're just going to go to the previous high, we can go down to 1778 or even lower down to 1750, so closer to, for the completion of wave 2, and from there continue all the way up. As you know, I see this as a reversal. I've been talking about that for a while. I don't expect a fresh low, but in case we're going to see prices re-entering the channel, then the chances, of course, for a downside are going to increase, which means we're going to have to revisit all this structure. It's going most likely to be some ABC and some extension to the complex leg from the 2060, was it, top also. So that's going to be all for the day, guys. I hope you did enjoy the video. You can of course click the like button if you did. Leave your questions, leave your comments, your analysis in the comment section. I will get back to you as soon as I can. Thank you for watching, and we'll have another session yet again tomorrow, and from there we're going to be closing the week. So take care and trade safe.